Good evening traders and welcome back to the channel. Today is another weekly breakdown video. As I said, I'm going to be doing these every single week. Whether I win or lose, you guys will see the trades. So we had 2 trades this week, so it's not going to be an action-packed video where we have 5 different setups, we're making tons of profit, but I just want to show you how realistic trading actually is. So we're going to get into that very soon. But firstly, I just want to say that all the trades I actually take are sent in my Telegram group. So if you are interested in taking the same trades as me, so the winning trades you see and also the losing trades you see will all be sent in that group. And I am on phase 2 of one of my 200k prop firm challenges, and obviously we passed phase 1 with the trades sent, and a lot of people are passing their challenges with the trades sent in the group. I'll put out some testimonials on the screen here of people passing their challenges. They're doing absolutely great from following my trades, so check out this link in the description for that. But we're going to start the video with a losing trade. So as you see in the group here, this is when I actually entered this trade, and it's very simple. As you guys know, I only trade when price is broken structure from the Tokyo low and it breaks in London. So the low was obviously this area down here. So if we mark this up, this area is where we were actually looking to take these sell positions from, or even looking for confirmation after a break of structure, because obviously we don't just enter as soon as price breaks like this, because a lot of times there is a pullback, and when there is a pullback, that's when we get into the trade and then take price lower. So this was the area I actually have marked, and obviously I am trading on the 15-minute time frame, so from 8 a.m. to 12 a.m. is when I get my entries. So when I woke up, I did my analysis. This was obviously the low I wanted price to break from. We did have this low here too, but price didn't give me an entry. So I then had to go, okay, what is the next low? And this was that. And here, people will say, oh, well, price only just broke structure, but price did break structure. And I only base it on the bodies. So you see here, we had these bodies where the line is, where price did actually kind of create this low before going up and creating the high of the morning before London session. And then price obviously at around 10:30 did come down, close below the area. So that was when I was looking to get into a potential trade if price did retest back up. So when price does retest, I'm not looking for price just to retest back at the zone straight away, because as you see, it probably would have been stopped out very quickly. I wait for a deeper retest back into the zone that caused the push down, basically. Not the zone that price is broken, but the zone that's caused the push down, if that makes sense. So we had an entry in here. Price obviously tagged us in, and we actually got in, as you see from the screenshot here, when price was at that point. So the candle hadn't actually closed yet, but we were then getting in the trade at that point. And then price, this was a very frustrating trade. As you see, price hovered around the entry for a while. We did have this wick up, which is a great sign when price closes bearish on a candle like this with this massive wick up. So a lot of people get scared. They don't want to hold a trade when it's going with so much momentum towards your stop loss. But the way I think about it is, if you were happy entering back here and the trade was invalidated at this level up here, why are you not happy entering or holding the trade here when price goes up halfway towards your stop loss, even though the trade is still, valid? We did have a good sign here, like this, when price then closed and broke through the zone that caused the initial break in London session. So when price actually does this, this is a great sign. Then we had a retest back up, and then price came all the way back up again, completely fine. The stop loss is where the trade is invalidated, for me. Then we went back up again, and then we hit the stop loss. The annoying thing with this trade, and the reason why I said it was frustrating, is because we had a solid bit of structure that had previously broken structure, and then that structure was then broken by a full push down. So in my mind, I'm thinking, okay, this is great. Price is broken structure. It's now going to retest back in, and then we're going to drop further. So exactly what happened with my entry, I expected that to happen again. So when price broke down, I get in a retest, and price drops down. I expect another retest here when price broke structure, because a lot of the times when price does break structure, it will retest before then making the next break, which is what I expected at this point. But that didn't happen, and then we did rally to the upside, and this trade did end in a loss, which, as you can see, stop loss hit -1%, which, like I said, is completely fine. So we're going to move further on now. For a lot of the days, I didn't actually have any trades in between here. I had a few setups that looked ideal, but I didn't end up taking them, and that's just trading for you. But price has been consolidating a lot recently. You see you have these areas of consolidation which seem to be happening quite a lot. You see this whole push here. The only place you could have got an entry is obviously this area here, but I don't trade at that time, so I wouldn't have been able to actually get in the trade on my personal account. So we're going to look at the next trade I actually sent in the group now. So as you see, we have this trade here. The thing with this trade is we had news at 9:30 and we had news at 2:45. So a lot of people don't like trading through news, but if I just take you back to when we actually set the limit for the trade and entered it, this is what I was seeing. So like I said, I look at the Tokyo low, which is obviously this level here. Some people will say, oh, this is the proper low, but I like to look at the most recent low to see where I am actually trading from. I see so many people looking so far back and trying to trade from an area that price hasn't been for ages, and I personally don't see the point. From my testing, the most recent low or the most recent high is the best one to trade from. It might be different for you because you trade with a different style, but for my style, this is the most profitable way of trading it. And like I said, we look for a retest back into the zone. We don't look for a retest of this area because I don't feel like, that's just trading like every single person trades. I don't want to be doing that. Obviously it can be profitable, but I feel like you'd have to have a very large stop loss. So let's say you were entering here. Ideally, you'd have to have price above the bodies. A lot of people would say, oh, stop loss above the wicks, but I like to have it above the bodies because for my style of entry, when I'm wrong, I'm usually wrong very, very fast. A lot of the times when I'm wrong, it's very, very quick. And I love this because I don't want to be in a losing trade for 5 hours, 6 hours. If I'm in a winning trade, that's fine, because obviously price has to go 3 times the amount of pips as it is when I'm losing. So if I'm in a trade, it's actually just a waste of time being in it for a long time for it to just lose. And let's say you are looking for, the stop loss is only 5 pips bigger in this situation, but let's say you're targeting the same take profit. Instead of a 1 to 3, it is now only a 1 to 1.6. So not my cup of tea. So we looked for a retest into this area, as you saw from the Telegram, and the next candle, boom, came up and we got into the trade at this point. Then price did drop. Again, like I said previously here, we've now broken structure to the downside, which is great. There's a great confluence when you're in the trade and price breaks to the downside in the direction you're trading. Price then retests the area and it is dropping. The news was around this candle here. So price didn't actually do much on that initial GBP news, but later at 2:45 we did have the USD news. So at this point, we're just consolidating. So consolidation, we break to the downside, which is a great sign. We've broken out of the consolidation. You could say now we've broken out of these lows too. So now we've broken out of 3 sets of lows, which is a great sign that price is going to continue further. And at this point, we were only 2 pips away from a take profit, and for that extra 2-3 pips, you're technically, if you're still in the trade, you're risking 3 pips for, a potential 30 pips or 40 pips even. So price messes around this area. We then have the news, which was, I'm pretty sure, caused actually on the next candle. So you'll see it here. That was the news candle. Price retested the entry. Again, completely fine for me. In my mind, I have a stop loss for a reason. People like to trade certain ways, but I've backtested. I've traded through these news events. There are certain news events that I won't trade, notably NFP, CPI, FOMC. I don't trade certain news events because the slippage and the potential slippage just isn't worth it. The only time I trade them is on my swing account, because let's say my stop loss on GU could be 80, 90, 100, 150 pips. The slippage you're going to get on that it's very hard to actually make a difference with slippage on that account size. And I've done a lot of data collection on NFP. I know the potential for price, if it's a fake out, if it's the initial move before then the actual move, I know what could potentially happen. And because I have that data, I don't want to hold my day trades through that, because let's say I get slipped 10 pips. Instead of losing 1%, I've now lost 2%. Whereas if I get slipped 10 pips on a 150 stop loss, you're only losing, a very, very small amount, 1/15 of your initial risk, which isn't 100%. So that is a lot better. So with this trade, we held through the news, and then price, as you see, dropped, and we hit take profit very, very nicely. You often see with news that the initial move isn't the move that's going to carry on for the rest of the session. And this was exactly the case with this trade here. And we obviously dropped to the downside, and again, consolidated, retested into the zone here again, this zone here, before then dropping further again, didn't break the lows. So that was quite interesting. So I have actually started a WillssFX book for these day trades only. So you can see that here, we took that one trade, which made us, 3%. I calculated lot size for a USD account by accident, so just shy of 3%, 2.8% basically. So in these videos, I will keep you up to date with this WillssFX book. Obviously, I have the swing one public, so you guys can check that out. But yeah, just an account here to show you the growth on the account. And obviously in the Telegram group here, target hit for plus 3%. And as you see, my execution on the MT5 was there. And I also took a video of the funded account, or the challenger account, hitting take profit on this trade as well, which is quite a cool thing to actually see. It's always great seeing the profit, seeing your trades close when that take profit line is actually hit. And yeah, not a busy week in the markets, but a profitable one, which is just great. If you're ending the week in profit, you're doing better than probably 90-95% of traders, which is what people don't understand. If you're making profit in the markets, you're doing better than 90%. If you make 2% in a year, you're doing better than 90% of traders. Just keep that in mind when you're not happy with your results. If you're making profit, you're doing well. That's how trading works. So if you like these weekly breakdown videos, comment down below if you want to see one every single week. And yeah, I'll catch you guys in the next video.